When we look at the artificial intelligence boom, it is clear that many companies are racing to secure their positions as leaders in this next wave of technology. Two of the most closely watched names in this space are Palantir Technologies and Snowflake. Both companies are heavily involved in data technology, but they approach it from very different angles. Palantir has built its reputation on creating powerful data analytics platforms that are widely used for critical tasks in government defense and intelligence, as well as increasingly in private commercial markets. Snowflake, on the other hand, has become known for its innovative cloud-based data warehousing solutions, which are designed for enterprises of all sizes across a wide range of industries. Because these two companies have different strengths, different business models, and different challenges, investors are constantly weighing which one currently represents the better growth opportunity. Starting with Palantir, its stock has already experienced an incredible run in 2025. Shares have risen by more than 105% this year, a climb that has caught the attention of both retail investors and Wall Street analysts. The main reason behind this momentum is the growing enthusiasm for artificial intelligence-powered solutions. Palantir has managed to position itself as a key player in the artificial intelligence ecosystem by offering software platforms that help organizations interpret massive amounts of data and make actionable decisions. Despite these impressive gains, there is an ongoing debate about the company's valuation. Palantir is currently trading at a forward price-to-earnings ratio of 242.37, while the average ratio across the sector is only 23.47. This massive gap has raised serious questions about whether Palantir's growth potential justifies such an elevated price tag. Notably, short seller Andrew Left of Citron Research criticized the company's valuation ratios, labeling them as absurd, which highlights how divided opinions are on the stock. However, even with concerns about valuation, Palantir continues to attract loyal investors. Many of them argue that Palantir deserves a premium valuation because of its deep ties with government agencies and the fact that its commercial division is growing quickly and delivering strong margins. Supporters believe that Palantir's ability to secure long-term government contracts provides stability, while its entry into commercial markets expands its future opportunities. It is also important to point out that part of Palantir's stock rally seems to be fueled more by general excitement around artificial intelligence than by traditional financial fundamentals, such as profits and cash flows. This mix of optimism and skepticism explains why analysts on Wall Street have very different takes on the stock. Some analysts remain impressed by Palantir's recent performance. After strong Q2 results, several research firms raised their price targets. Dan Ives from Wedbush, who has long been a supporter of Palantir, reaffirmed his buy rating and even named the company one of his top technology picks for 2025. He went as far as to describe the quarter as a blowout, which shows his confidence in Palantir's ability to capitalize on the artificial intelligence boom. At the same time, other analysts remain cautious. Rishi Jaluria from RBC maintained a sell rating on Palantir, arguing that the company's risk-to-reward balance is not attractive at current levels. This divide among analysts underscores the uncertainty surrounding Palantir's near-term outlook. Now shifting to Snowflake, the company presents a very different profile. Unlike Palantir, which is heavily dependent on government contracts, Snowflake has a much broader focus. Its platform is widely used by enterprises to store, manage, and analyze data in the cloud. This gives Snowflake significant exposure to trends in enterprise information technology spending. While this model reduces reliance on government budgets, it also introduces risks if corporate spending weakens during economic slowdowns. However, when demand for cloud services is strong, Snowflake benefits greatly from its consumption-based revenue model, where customers pay based on usage. Snowflake recently enjoyed a significant rally after posting impressive quarterly results. Just last week, its stock price surged nearly 20%, marking a fresh 52-week high of $249.90. The jump came after Snowflake not only exceeded revenue expectations, but also beat earnings forecasts in its Q2 results for 2026. Looking ahead to Q3, the company expects product revenue between $1,125 million and $1,130 million. This forecast is well above the earlier high-end estimate of $1,040 million, which demonstrates management's confidence in continued strong demand. Analysts remain upbeat about Snowflake's future. They are encouraged by robust consumption trends and see artificial intelligence as a major tailwind for the company. Brent Bracelin of Piper Sandler raised his price target from $215 to $285, which is the highest target among analysts on Wall Street. He expressed growing confidence in Snowflake's artificial intelligence roadmap, believing that its new artificial intelligence products could resonate with large enterprises. If this outlook proves accurate, Snowflake could experience steady growth through 2026 and 2027, giving it a clear advantage in the enterprise cloud market. To compare the two companies side by side, analysts have turned to TipRank's stock comparison tool. The results show that Snowflake enjoys stronger backing from Wall Street. Snowflake has a consensus rating of strong buy, with analysts forecasting an upside potential of nearly 11% from its current trading level. Palantir, on the other hand, has a consensus rating of hold, with an average price target of $154.47. That target implies a decline of about 1.43% from current levels. This contrast makes it clear that analysts see more near-term potential in Snowflake compared with Palantir. In summary, both Palantir and Snowflake stand to benefit from the artificial intelligence revolution, but they do so in different ways. Palantir is closely tied to government work and aims to expand into high-margin commercial contracts. Its stock price has already soared this year, but valuation concerns remain a major point of contention. Snowflake, by contrast, is a dominant player in enterprise cloud data services. It has recently delivered strong results, and analysts are optimistic that its artificial intelligence roadmap will strengthen its position even further. Ultimately, the choice between Palantir and Snowflake comes down to what investors value more. Those who believe in the long-term potential of government-backed artificial intelligence projects may lean toward Palantir. Those who prefer steady recurring revenue and strong exposure to enterprise cloud trends may favor Snowflake. Either way, these two companies are at the forefront of the artificial intelligence-driven future, and both are likely to play important roles in shaping how businesses and governments harness the power of data in the years ahead. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.